When Jessie discovered the FIRE movement, she went all in on making that dream a reality. Within just 2 short years, Jessie grew a real estate portfolio worth over $2 million and actually became semi-retired by the age of 30 years old. I can't wait for you to hear more about her portfolio because in just 2 short years, Jessie has utilized multiple different real estate investing strategies, and there's going to be a key takeaway for everybody listening to this video. Welcome back to another episode of How I Started. My name is Noah Bacon, and today I'm joined with Jessie Dillon. Jessie, thank you so much for joining us today.
Yeah, I'm happy to be here. Thanks for having me.
You know, obviously with the intro of the video, like I said, you semi-retired by the age of 30. So why were you looking to retire early and why was real estate your avenue to, achieve that financial freedom?
So early retirement for me was a lot about just wanting to have a fallback plan. I didn't want to be dependent on doing physical work and punching a clock because in my beauty salon, which I had started in 2017, I was working really, really hard. I was working more than full time and I was starting to get overuse injuries. And when I had to suddenly take months off during the pandemic and suddenly take weeks off with these overuse injuries, I realized that only having this one income stream that was dependent on me showing up at the salon was really not very safe. That's ultimately what inspired me to start learning more about the FIRE movement in 2020, 2021.
So, like you said, it was, probably had a little bit of burnout there from your job working in the salon. And, what was getting you excited about real estate at that time once you, found the FIRE movement then?
I was definitely burnt out. So it had been a couple years of going really hard with the salon, and I'm so grateful that it had been so successful from day one. But, I was sacrificing a lot in terms of my personal life, even my physical health, my social life, my family life. I just realized that there had to be some other way to pull back. And it was actually a Facebook clickbait article that got me interested in the FIRE movement. So there was an article about a girl who was retiring at 26. And I clicked on it, I read through it and learned all about the FIRE movement and aggressively investing in index funds. And the salon was making more than I really needed to live on. So I was able to aggressively invest 70% of my income. But what got me excited about real estate was I realized that even with a 70% investment rate, it was still going to take me 11 years of doing what I was doing to become work optional. And I knew I couldn't keep that pace up. But one podcast sort of led to the next. And there was someone being interviewed who was a real estate investor. He went on to explain how with real estate, you could start to replace your income in more like 2.5 years. And that's just not unheard of in the real estate world. And ultimately that podcast led me to BiggerPockets, where I found the Rookie podcast and all these books and all these workshops and boot camps and everything. And I spent a couple months just really being a diehard student of real estate, mostly through BiggerPockets. And this was fall 2021. And it was that Thanksgiving that I finally started offering on properties. So to answer the question, ultimately, I got excited about real estate because I could achieve that work optional status so much faster than if I just left it to the stock market.
That's amazing to hear you got, your education from the finance standpoint. And then you're like, yeah, I need to find other resources to really get me to where I want to go. And it sounds like you found probably BiggerPockets, obviously, like you said, but a lot of different podcasts, a lot of different educators from the real estate space. And now you're getting excited here at the end of 2021. It seems like a golden opportunity, a golden time to really buy real estate. So let's talk about that first deal then. How much money did you have saved up and what were you looking for and what did you eventually close on?
I think at that time I had a little over 100,000 in my bank accounts, and that included like a money market account. And I was prepared to pull some money out of index funds to buy that first property. So I think I had maybe 125 to work with, but that included my personal reserves. Like that was everything at that time. So that first property, I found it listed for $410 and it was a 2-family about 20 minutes away from me, but it had been listed for about 45 days, which was really unusual in this area at that time. I think what happened was it fell out of contract and then maybe people were a little afraid of it because it had been listed for so long, but it was kind of a unique property anyways. And I approached the listing agent directly. I really built rapport with her. I was so just crazed running my numbers, like going through every worst case scenario and getting down to the penny with everything. And I sent a big long email explaining why the best I could do was $350. We ended up agreeing on $357, and then the property appraised for $420. So I was so happy that I walked into so much equity, and I really think it was because I was able to build rapport with the listing agent and really explain why that was the only price that made sense, like from a buyer's standpoint, without offending the seller. For that, I was able to put down just 10% because I used a certain bridge loan product. So I think between the down payment, closing costs, any kind of other transactional costs, I probably brought something like $50,000 to the deal, and then had another $10,000 in reserves in a separate account for it.
And, obviously you had that amazing financial runway that you built up with from your really aggressive savings percentage there at about 70%. So it sounds like it was an amazing equity play right out the gate. Your appraisal came in much higher than I'm sure you were probably expecting with your negotiation. But can you talk to me about how that performed since you've had the amount of equity in the beginning? Does it cash flow nicely too, or was it strictly just an equity play?
It does cash flow nicely too, yeah. And that's really why I had to go lower with the price. So I think today it's worth around $525, the property, and it cash flows about $1,000 a month, and that's after all reserves and everything. That's
amazing. That just goes to show, and we're here today in 2024, but in 3 short years, you have an absolute home run right off the bat. And not only the equity, but it's the income that you want to get closer to your inevitable retirement goals here. How have you continued to grow your portfolio since that first one? Because I know it's not all rainbows and sunshines right off the bat, but it sounds like for you it's been that way. And how did you kind of take that momentum to keep your portfolio going?
It definitely has not been all rainbows and sunshine, just to clarify. I feel like real estate investing has made me feel absolutely insane sometimes, and I think no one talks about this enough. Tears have been shed, for sure, throughout this process, but even in the most stressful moments or moments where I just felt like nothing I was doing was working, I still knew that it was a great long-term play. Like, it's so easy to push through when you can see the fruits of your labor pretty quickly with real estate, I think. But in those first 9 months of buying, I had closed on 3 properties, all in New England, all in, higher cost areas. I was able to put down 10% or less on all 3, including that first one. But it's easy to get tapped out of down payments when you're in a high cost area and doing it alone. So that's sort of when I realized I had to start thinking differently and maybe partnering up. So my next purchase was actually a bit bigger. It was long distance, a 13 unit in Chicago. And that's when I started to partner up. So I brought a capital partner in on that deal.
When did your strategy kind of change then in your portfolio? Was it after you had, your 3 properties with 100% ownership? Now I'm going to look to partner with an out-of-state investor here. Can you talk to me what that transition was kind of like for you?
I didn't house hack until the 3rd property, actually. The second purchase, I put down 10% with a vacation home loan, and I also used it as a short-term rental. The 3rd property is a house hack and is one of my favorite deals. But I was a little resistant to having to transition to partnerships. At that time, I had the time and knowledge to keep going, but I was tapped out of the capital to keep going alone. So I knew that I had to find someone who had the capital, but maybe didn't have the time or knowledge or experience to do it alone, or the interest in doing it alone, which is huge. And it did take a bit of time to really find someone who I felt like our goals aligned, the vibe just felt right. We both felt like it was a huge win-win scenario. So from the time that we started talking about possibly working together to the time that we closed on our property, it was probably about 9 months. We had closed summer 2023. But I did have resistance around partnerships. I had built the salon by myself, so I really envisioned doing real estate by myself. But I can see now how there's a point at which every investor has to make it a team sport. And you do have to sort of overcome some mental hurdles about that, I think, but it's so worth it to be able to keep going a little bit quicker and a little bit bigger.
I heard a little golden nugget there that, a lot of our investors that are watching this series are thinking about house hacking being their first one. And you even said that was your best one or your favorite one. Can you tell me why house hacking has been your favorite one? Was it your ability to get your hands on as the landlord and kind of, put your taste into the property? Can you talk to me about why house hacking was so your favorite deal so far that you've done?
Being able to write out on paper how much lower your personal cost of living is with house hacking is like addicting. So the house hack is awesome. It's a 2-family and I have a long-term tenant on one side. And then I also midterm rent my guest room to travel nurses. Compared to when I was living in a 2-bedroom apartment, only a mile away, but not in as nice of a neighborhood, my cost of living was about $1,800 a month, maybe a little bit more. And that was between rent and utilities. When I look on paper at my mortgage on this house, is just over $4,000 a month. But then with all the incoming rent and even the utilities that I have to pay for the whole building, my personal cost of living is easily more like $700 a month. So I live in a newly flipped home that's way bigger in a way nicer area with like a big yard, and I pay, less than half to live here as I did in the apartment.
And I'm sure from your background in the fire movement that's only just, you could scream it from the rooftops how exciting that is. So I know we talked about, the beauty of house hacking. Can you talk to me about some of the bad things that have happened in your portfolio? Is there any bad deal that you potentially walked away from that you had a bad feeling about? It sounds like you had a little bit of a hurdle to get over, just, the fear of, opening your portfolio up to a partnership. So can you talk to me about anything that's, been a real struggle for you so far to date in your portfolio?
There have been a couple, I guess I would call them misses, but in retrospect, not even, because, you take a lesson away from each of these experiences, right? So there was one property that I bought that just really didn't perform as well as I expected. I learned a lot of good lessons about what I would do with a vacation rental going forward, but the property just turned out to be sort of a break-even deal, and I had a lot of equity trapped in it, but I actually ended up selling it on creative financing. And that alone turned it into a pretty good deal for me. Sometimes
you just don't know what you don't know. And it could be good. You get that feeling just on the inside that you're not getting the warm and fuzzies about this one. I need to potentially walk away here. So let's just zoom out for 1 second here, because, a lot of investors, they talk about quantity instead of quality. And your portfolio, it sounds like it's just a lot of absolutely great performing properties. Can you tell me how many properties you have and what your cash flow looks like today?
So right now I have 3 properties. 2 of them I own alone, and one of them I own 50-50 with a capital partner. So in total, it's 17 units. My net ownership percentage would be like 10 and a half units. And I do kind of feel like unit count is so corny, but I know people want to hear about that. With the house hack, it's hard to say what the cash flow is because I measure it more with I'm saving about $1,000 a month, With that duplex, the first property, that cash flows around $1,000 a month. And the 13 unit that I own long distance with a partner, that we're still in the value add process. So that was a huge value add play, but once it's optimized, it should cash flow a total of about $6,500 a month, split between the 2 of us.
We're going to get back to the beginning of the video here with your background being in the fire movement. What's your exit strategy with real estate, and what's your retirement age looking like here now that we're in 2024 and you've had the 3 years of just massive growth over your real estate portfolio?
My ideal retirement age was yesterday, but I feel so silly even saying that I want to retire because at this point, the way that my life looks is pretty great. So I only work in my salon 2 days a week, and my back end work on the salon and the real estate business is really nothing crazy. I also have an amazing assistant who helps me run both businesses really efficiently. So there's not a whole lot that I would be retiring from at this point, but I would like to get to a place within 2 years where I don't have to physically work in the salon money-wise, but I probably would continue to at least 2 days a month anyways, just to stay relevant. But that's the plan. So it's really just a matter of continuing to buy in a steady, smart way, not in a very aggressive way, so that I can replace my active income from the salon with more quote unquote passive income from real estate. And again, I would like to achieve that in about 2 years.
That's awesome. And I like the way you said quote unquote passive income, because I think a lot of investors, when, like me, when we get into it, we think it's so passive. I've house hacked 2 properties, and that was the most active that I think I possibly could have been when it came to real estate. What are you thinking about when you look towards the future? Are you looking for more, close to passive options where you'll probably be a limited partner on the deal on a syndication, or are you going to be continuing to look to build your portfolio with, some of these smaller assets that can really get you high cash flow and, 100% 10% to 50 or more percent of ownership?
So my ultimate goal, for the next 2 years or so would be a net 40 units owned. So with this next purchase that I'm working towards, I think I'll be just about halfway there, maybe a little bit less, but a net 30 or 40 units owned would get me to my cash flow goals. So that's really the plan. And I am no longer really interested in like the sexy investing strategies like vacation rentals. I love just a tried and true value add multifamily. And I think that once I get to that point where I am making what I want to make from real estate, I'm not sure that I'm someone who will just push the finish line out and want to keep going and set a new goal. I think that there's a good chance I will just be perfectly satisfied with those net 30 or 40 units owned and just kind of leave it at that. And my goal really is to have the time and space and mental space really to just spend more of my time like volunteering and traveling and being present for my family.
That sounds great. It all sounds great, and it sounds like you've really had this roadmap since the day you've really started to, think about your finances from day one. A question that I ask every guest on the show is, what's the biggest piece of advice you would give somebody that's in your shoes today? And I ask that because you were only in these shoes about 3 years ago when you were finding some of the ideas from the FIRE movement, stumbling upon BiggerPockets, other podcasts. Can you talk to me about something, I wish I had that piece of advice before I got started out, or I wish somebody told me that?
Yeah, I think anyone embarking on any kind of entrepreneurial journey, and I remember feeling this way when I started the salon too, but with real estate I feel like there are even more naysayers. So my advice would be to only take advice from people who are doing what you want to be doing. That's not just to say don't take advice from people who are not successful real estate investors, but also be cautious about taking advice from people who are showing up in the real estate space in a way that you don't really admire. So for example, someone who has 50 million units and like 100,000 vacation rentals, maybe I wouldn't take advice from that person because that's awesome, but that's not what I want to be doing. So I would encourage you to really seek out people who are living a life and building a portfolio that you would just absolutely love to have and go to them for advice.
That's really amazing advice. And Jessie, I really can't thank you enough for your time today. It was really great to learn so much about you and learn a lot about what you've done over here in the past 3 years.
Thanks. Yeah, always happy to share.
If you're looking to learn more about Jessie, you can find that information in the show notes below, and you may even recognize her as she's been making content for us on the BiggerPockets Rookie channel, and she'll be showing you ways on how to get started with multiple different strategies like she's done. My name's Noah Bacon. If you want to connect with me, you can find me on BiggerPockets platform, and you can even meet me in Mexico this year. We're going to be hosting BPCon down in Cancun, Mexico from October 6th through 8th. If you'd like to find out more, you can go to biggerpockets.com/events. And if you like this video, please give it a thumbs up, and please subscribe to the BiggerPockets Rookie channel, as we'll be sharing plenty of stories on how investors got started just like Jessie's. Thank you so much and have a great day.